Hi, friends. This is Steve at New Compass Crypto. Thank you for joining us as we discuss FTX, Solana, Alameda Research, Sam Bankman-Fried, and what has been happening to crypto over the last kind of 48 hours, but specifically kind of the last 24 hours, and why it's been so volatile and why the directions that prices may be moving. So let's start with Sam Bankman-Fried. Sam Bankman-Fried is kind of this 30-year-old whiz kid. He started Alameda Research, which is his trading arm, his investment firm, and used money in 2019, including from Binance, to found FTX. And then FTX, over the next several years, became the third largest trading firm in the world. Binance, at that time, got a percentage share of it for investment. And that is now worth roughly $2 billion, or it was as of last week. And they got paid in FTT. FTT is the native coin to FTX. As of June 2022, this past June, Alameda Research had $14.6 billion in assets, but $3.66 billion was of unlocked FTT, the native token, FTX, which is basically a coin that only has value on that exchange. Kind of like if you're playing a video game and you're getting rewards, it only has value within that video game. Another $2.16 billion was FTT collateral. That's a lot of money that's being tied up, that's being just backed by itself, not backed by US dollars, not backed by US treasuries, simply backed by what you say the value of your own coin is. And an additional $3.37 billion was crypto, the largest amount being Solana, over $1 billion, because remember, Solana, Alameda Research was one of the early investors in Solana. This just broke about an hour ago from the Wall Street Journal. Sam Bankman-Fried told an investor earlier this week that Alameda Research owes FTX $10 billion. So he had been using one to fund the other. He'd been borrowing from Peter to pay Paul. Now Peter owed Paul $10 billion. FTX extended loans to Alameda using money from its own customers that had deposited on the exchange for trading purposes. Wow. Sam Bankman-Fried now calls that action a poor judgment call. It's also called illegal, unethical, and way, way, way over the line. So FTX, which had $16 billion of customer money, took more than half, $10 billion, and just lent it out to its trading arm, Alameda Research. That is just absolutely catastrophic. This is something that has a timeline. The timeline just began last week. CoinDesk had a leak report that Alameda Research, the trading arm that we've just discussed, had a heavy reliance on its own coin, FTT, and that it was unsecured. Binance, which now held $2 billion worth of FTT, said, oh my goodness, this is a recent revelation. We didn't know anything. And they dumped $2 billion worth of FTT, all of it. All that it owned, it just dumped it on the open market through Binance. Now, it should be said, CZ, the person who is the head of Binance, and Sam Bankman-Fried had been getting over a Twitter spat over the last month. There's been concerns about them that were kind of cataloged in the Wall Street Journal. So this was also a spat between two CEOs. And CZ, I think, wanted to punish Sam Bankman-Fried. And Sam Bankman-Fried put himself in a position to be punished. So CZ dumped FTT on the open market. The price of FTT over a 12-hour period dumped 75%. It lost 75% of its value. And over the next day, it lost an additional 15%. So it lost 90% of its value in about 48 hours. FTX then saw $6 billion of withdrawal in 72 hours. And FTX did not have the money to withdraw that, because what it does is when you're withdrawing money from an exchange, this is what you do. You say, I want to sell my, underlying thing, whatever it may be. But, I want to sell Bitcoin, I want to sell Ethereum, and then you're going to take cash money out and you're going to transfer it to your own bank. But as you saw, he had already taken $10 billion and he had given it to Alameda Research. So all of this only worked. It genuinely was a Ponzi scheme. It only worked if no one withdrew money and the value kept going up, but it didn't. So it paused transactions, international transactions. Binance was going to come in and buy it because CZ said, hey, no, now I'm going to come in and buy it for pennies on the dollar. So he had defeated his enemy. But then Binance announced the next day, yesterday, that it was backing out of the deal because it discovered that it had mishandled customer funds and it was being investigated by the Securities and Exchange Commission. So Binance said, no, we don't want to do this. It was initially rumored that the hole that Binance had, that FTX had, was $6 billion. Then investors found out it was $8 billion. Now we're learning that it's closer to $10 billion. So anyone that wants to come in and buy FTX, even if they buy it for $1, has $10 billion worth of loans, collateral that they've got to push out. Finding a buyer for FTX that's going to come up with $10 billion for an agency that's going to be investigated by the SEC is going to be a very difficult challenge. This is of last month. Last month in late October, Binance held 55% of the crypto trading volume, the crypto volume by trade. As you can see over here, Coinbase held 5.3%. FTX right here, 4.5%, and FTX US, which is still functioning, FTX US held only 0.6%, so 13% of FTX International. So together, FTX US and FTX International make up, 5.1% of the trading market. So what is the situation like right now? Now that trading has been halted in FTX International and that people on FTX US are withdrawing all their money. Well, over the last 24 hours, Binance has now has 71% of the entire volume overall. And now, Coinbase now has 9% of the trading volume. So as you can see, CZ, who heads up Binance, benefited greatly from FTX's collapse because that trading volume is all going to go over to Binance, to him. Coinbase is also going to benefit from this. So this has been a very disturbing time. There's an optimistic way to look at this and a pessimistic way. The optimistic way is, hey, a bad player and a crook and someone who did really dumb things was heading up the third largest exchange in the world, but that third largest exchange in the world was only slightly over 5% of the overall market, and it's going to go away. So really 95% of the market and of the volume is still great. So really nothing to worry about here, folks. Let's look beyond this. This is not that important. Then there is the pessimistic way of looking at it. The pessimistic way of looking at it is that this has caused a consciousness crisis within crypto. This is now feeding the narrative that crypto is nothing but Ponzi scheme built on itself and that it only works if prices go up, and that really nothing can happen until we have firm regulation in the US and firm regulation internationally, and that it's a space inhabited by crooks. Now, this is going to affect the price of Solana because Solana has been dumped into the open market. The founders of Solana have also done something a little morally questionable over the past 24 hours. And that is that Solana, about $50 billion worth of Solana has been staked, meaning it's been held by Solana for a year and they get interest on that, about 4.2%. So, but you only hold it for a year. After a year, it can be unlocked. That was due to happen actually today. The founders of Solana came and said, hey, we're not going to allow it to be unlocked. We're only allowing 20% to be unlocked. And those are the developers that are going to be unlocked. But for you common investors who staked Solana and bought Solana, no, we're not going to allow it to go into the open market right now, because what people would do is they would unlock the Solana and sell it immediately, and then the price would go down. So they're doing some things that, could be described as unethical. So we're going to wait for all this to shake out. I am still optimistic about the technology in all of this. Bitcoin and the Lightning Network are still game-changing technologies. I still believe in Ethereum, but we need to wait and see what the space is going to do overall. The reason why I recommended that we pause all trading yesterday and that we sell everything and go to 100% cash is because I wanted to play defense. I wanted to say, hey, the crypto markets are very volatile. They could overreact. If this gets out, Bitcoin could very well fall to 10,000 or even below. And if we could have gotten out at 16,500, at 17,000, then we would have lost a lot of money. So I wanted to play defense, but I also wanted to see what the SEC is going to do. Is the FBI going to get involved? What are people going to be saying in general about the crypto space, and has faith and trust been lost? So we need to wait for all those things to shake out. So I still believe in the technology, but I want to see what the markets are going to do. I don't have regrets that we got out of the space and then crypto today jumped. It jumped because the latest consumer price index report dropped this morning. It showed that inflation had fallen significantly. The traditional markets are partying like it's 1999. They're going through the roof. They think inflation has been beaten, it's all over. Bitcoin spiked, Ethereum spiked. But there could be other shoes to fall in the crypto space, and I didn't want to be holding the bag while all those come down. So we wanted to play defense, we wanted to be conservative, and I want to wait for all of this to shake out and to see what these markets are going to be and what the long and short-term effects are going to be before we get back in. Thank you for joining us. As always, we post this on our YouTube channel at newcompasscrypto.com and on our website. I hope that we've given you some perspective into what our plans are going to be in the future. See you again soon. Take care.